Yo, what's poppin' YouTube? Just wanted to do a video. It's been a minute. This is the SPX here. The king of them all. The indexes, the 500 top stocks, whatever, are made up in this index. So what I wanted to do is go over this index and basically clarify my targets and look to start. I'm already short, but look to probably press my shorts on this bad boy. The markets are due to a pullback. We haven't pulled back, since April of last year. I went over this before, a deeper pullback. So again, I think the 6100 or 6200, 6000, 5800 area right here will be in play. So if we break this, ideally what I want to see happen, usually you'll break this, you'll come down, pull back, maybe pull back, dance around, and then head lower. Oops, and I'm still messing with this thing. But basically, that's the type of move that we're looking to get on this market. And then the target would be right around here, where I would cover my shorts, maybe even fill this little gap right here, and then reverse long, which this would be perfect if this were to occur. It would be about a 15% correction on the market, so 10 plus correction seems, viable and, fair and due. And you do have the main sectors rolling over that make up the S&P, which would be bank stock, or this is financial stocks. Look, they broke their uptrend line, couldn't get above, they look above and fail, and now also looks like it's going to head down lower to like the 115 area. And we can look at bank stocks as well. These are financials. We kind of have a head, a right shoulder, a left shoulder, or a left shoulder over here. This is the neckline. So again, if financials break down, we're going to go lower. And I believe this is just like the other ones. So there, again, you have the head and shoulders pattern. You're about to break the neckline, and there's all this open space here. And then there's also XLY, which is basically Amazon and Tesla. This is also very similar. You got the head, shoulder, shoulder. You broke this trend line here, and it's making lower highs. So again, all this blank space. So because of that, these are a few sectors that make up the S&P, or the ones that hold the most weight. Like, we have XLB rallying, but who gives a shit, because that's basically 1 or 2 or 3% of the market. So nothing. XLI, same shit. Not much. So you can't go higher. The one sector that's holding this thing up, what I'm also ready to short until my hands bleed, is the semiconductors. These fuckers we kind of got a double top here going. So we need to get this broken, and I'll be shorting the shit out of semiconductors as well. Probably using Soxis. This is the leveraged ETF, which got quite a bit of volume coming in these past 2 days. They tried to come in here, tapered off. So, a lot of this stuff looks like we're going to break out higher. Another thing you can track, this is FNGD, which again, finally broke out, and now looks like it's going to break out higher, which this is basically an inverse of, whatever, Meta. It's got like all the shitty stocks in it, or all the Fag 7 stocks in it. But this is one I'm long as well. But this looks like it's going to rip higher. If this goes up, that's not good. As you can see, the last time it went up with authority was in March of last year, when we corrected on the indexes. So back to my original video, or theory, whatever point of this video is short the market. Or if you're long and you don't short, raise some cash, tighten up stops, or, you may want to buy some puts, because it looks like we're going to head lower. Who knows what the theory will be? Tomorrow we have CPI. We had a lot of delayed stuff. The market loves to fucking play games. But let me go show you these. And the jobs report. The jobs report here we had this morning. I'm sorry, this was 2 days ago, Wednesday, which was totally BS. They lied about that like everything. It's all lies. This morning was jobless claims and new home sales. The market didn't really care much. We got some movement, but we're weak. And then tomorrow is the big daddy CPI. And all this is delayed because of the fake government shutdowns. Again, more bullshit. We just keep kicking the can. So the volatility is everywhere. And we have those wars going on, and we have tariff going on. So, you know, to be a bull here is pretty ballsy. But people are long and staying long, so, you know, that's what makes the market. But anyways, we'll see what we're going to get here, because, again, we have a lot of downside here. So I'll report back to clarify this, but while I'm here, what was another video? Woo was a trade we're in, which I don't know when I made that video. But Woo broke out, and that was pulling back in, which is what you want to see. It's above the fast moving averages here. And you can go back and look at the video, but you know, here's our Woo trade idea on the YouTube channel. We're in here. We don't want to be in under these red lines. We want to be out, you know, or reevaluate. Anywhere in this green paint, we want to just stay in right in this trend up. I have some calls on here and some comments, but we'll see how that goes. So anyways, you know, SPX, are you going to hit that number or not? That's what we're waiting to see. Like I said, I believe we're going to hit 6,000, which would be a nice 800 point drop. And you know, the market can do that in 2 days. It can take out, one day can take out 30, 40 days of work. We've seen that before. So this is what I'm watching. And then another freebie bonus is TLT that you could see is trying to break out here as well on the daily chart. And if TLT goes higher, as you can see, it's a growth scare. So people are going to want to get a yield, because the stock market, if this goes higher, that means stocks are going to drop. So there's going to be no return or yield you get. So investors that need to put money to work will go buy bonds, because it's basically, you know, somewhat of a risk-free bet relative, less volatility, and you're getting a yield. It's probably not above inflation, but we know they lie about inflation too. But again, TLT is another one to have on your radar, because this could be the trade of the year if it breaks out of this triangle it's been in for like 4 years. So yeah, TLT is the one to watch as well. And you can see we're going to go up or down, but we tried to go lower all 24, 25 twice, and we kept bouncing. So now, you know, we're making higher lows, as you can see. So that usually is going to yield or lead to higher prices. And you can see today we broke out already, but today we broke out and up with authority. Not the cleanest trend line here. Let me line this up a bit. So, you know, a breakout here after we put in higher lows all the way up. So we had the low here in May, the higher low that held the line in the sand, another higher low, another higher low. We tried to go lower, but they scooped it back up. So because this low stayed above this low, this is some Elliott wave shit, kind of dirty, we should head up higher. So again, TLT is a great buy. All right, guys, that's all I'm going to have on this one. Any questions, holla at me. Like or comment. Peace, bros.